Frank, thanks for being with us today.
Sure. Thank you, Dave.
Let's start with a brief overview of the history of your company and also your background.
Sure. Thank you. The company has been around for about 5 years right now, and it was always owned privately by two individuals with very large other businesses in Indonesia, significant businesses, but they wanted to get into the energy business. So they started this company 5 years ago, acquired some assets, and I joined them about a year ago. We'll talk, I guess, a little more about the assets themselves, but a little on my background. I've been 41 years in the industry, started at Texaco Inc., had a wonderful 23-year career at Texaco, and exited Texaco. I was president of Texaco International Operations and ran the international operations for the company. Had a great, great career. When I exited Texaco, this is very interesting because when I exited Texaco, the largest producing asset in the world for Texaco was in Indonesia. And Chevron, which acquired Texaco, the number two largest producing asset in the world for Chevron was Indonesia. So together, we were producing 1 million barrels a day. And as Chevron notes on their website, they've produced 12 billion barrels from Indonesia, $1 trillion in cash flow. That's how important, that's how significant Indonesia is in the world. But people don't know that. And so that's the story we got to get out there. That's why I joined 1 year ago when we were a private company. And then we went public on the New York Stock Exchange, the first IPO ever done by an Indonesian company in history on either the New York or the NASDAQ. We did that on December 19th, last IPO of the year, which meant also the decade. So we're ready to go. We're ready to start developing our assets. And, this is a great part of my career now to get back into the international business after starting two startups on the New York Stock Exchange, get back into international and do what I can for this company and for the shareholders to create shareholder value.
Well, that's a great background, your experience at Texaco, working in Indonesia. Talk to us about the two assets operating in Sumatra and Java. What are the production plans and the expected timelines?
So we have two assets. One is on the island of Sumatra, one of the large islands off Indonesia. And just as a background, Indonesia is the fourth largest country in the world after China, India, United States, and then Indonesia. But in a 50-year history in the energy industry. And as I mentioned, Chevron Texaco having produced 12 billion barrels there, most of it on the island of Sumatra. So that's where one of our assets is, 63,000 acres. We've got 4 wells producing, and it's producing about a little less than 300 barrels a day. But that provides enough cash flow to run the company, cash flow even. Just to jump over to the other asset, as you mentioned, is on the island of Java. Java is, and we're in the west part of Java. There we've got an asset with 1 million acres, just 16 miles from the capital city of Jakarta. 1 million acres, as a perspective to people in the United States, would be 70 times the size of Manhattan Island. So 70 times the size of Manhattan. Only think of it 16 miles from Manhattan. So that's a big natural gas play. The one in Sumatra, oil, this one, natural gas. So there are two major assets. But going back to the one on Sumatra, where we have 4 wells producing, we've announced, and we'll have more announcements on this, that we're going to take the proceeds and drill 6 wells over the next 12 months, or even less, by the end of this year, 2020. What will that do to the company, those 6 wells? Well, each well alone will start producing about 190 barrels a day. And we're at about 200, a little less than 300. That, 2 wells more than doubles the production and the cash flow of the company. So what you'll see from us over this balance of this year is announcements saying we drill 2 wells and we more than double production and cash flow. Then about a month or 2 later, we drill 2 more wells, double production and cash flow again. And then the same thing again. So, there's a lot of milestones, a lot of announcements there that'll be made on that. And it'll have a dramatic difference in terms of cash flow and production to our companies.
What are some of the key challenges in operating these assets in Sumatra and Java?
Yeah, so the one in Sumatra is pretty straightforward. It's already a discovered field. We've drilled wells there. We know the cost of drilling wells. We're right now getting the permits from the government to proceed with the drilling of the wells. That'll probably be an announcement coming up soon, that we've received full permits and that we're ready to contract a drilling contractor that'll start drilling there. There aren't really too many challenges there because we've done it before, and these will be production wells. So we'll just move forward, drill 1 well, Then that rig will just move over, drill another well. Very seamless operation. 1.5 million a well. We expect to receive 2.1 million in net cash flow after 12 months from that well. So more than the cost of drilling. So these are 100% rate of return wells that we'll be drilling. So, a very easy, we don't, foresee any real challenges there. But people ask, what's your cost of production? How low can you still produce profitably with oil prices? Well, we have an operating cost, full in production cost, and operating cost of only $21 a barrel. So it gives you sort of a sense, even though oil now is in the high 40s in Brent, we can easily produce and make money at that kind of a price. And they price it in Brent and in dollars is what we get paid. On the island of Java, the million-acre block, that's a natural gas play. We're blessed because Indonesia is buying the gas. We're only 16 miles from the capital. Gas prices there are 300% greater than the natural gas price here in the United States. So a really great margin there. Infrastructure and pipelines have been developed. We'll do some more on-ground work like seismic and other kind of developmental kind of appraisal type of work. And we expect to drill our first well within about 12 months and then start drilling on that asset. That's sort of the big, huge elephant opportunity for the company, potentially worth billions of barrels of oil.
You recently raised capital of $15 million. How will you deploy this capital? How long will the capital last?
Sure. So right now, with the 4 wells we're producing from in Sumatra, that basically makes the company cash flow even. So these 6 wells will cost $1.5 million each. What we're going to do is take that $15 million, and we have plenty of money from that $15 million raised, even netting out all costs and expenses, to drill those 6 wells. And what will that do? That will just quadruple, really, almost quadruple production for the company as an exit to 2020. So we'll start taking that cash flow to either drill additional more wells there or go over to Java, drill some wells there. So we don't see a need to go into the capital markets for quite some time. We've got enough cash from only that $15 million because that will just use to generate more cash flow. So we're going to deploy all that, what I say, to the drill bit. Drill the wells, produce oil, and produce cash flow and production to the company.
To recap, what's the essential value proposition for investors? Why should they consider owning your stock today?
Sure. I mean, what companies, the energy companies have been beat up over the last few years, and the drop in oil prices last week doesn't really help. However, what you got to do now is look for companies that are in the right space at the right time. And where we are in Sumatra Island with our oil production and 6 new wells we're going to drill, these aren't shale wells like in the United States. I founded a company drilling shale wells. It's still doing very well, but the rates of return there, the cost of production is so high. We're drilling straight conventional wells, straight down 3,500 feet, pretty shallow, no horizontal drilling, no fracking, very simple operation. So there aren't too many companies that are going to be able to go out there, get the price of Brent higher than what's being paid in the United States, costs you only $21 to produce, selling it for $40, $50 right now, probably going up to $60. So, they're going to see a company here that's going to quadruple in its cash flow and production, and with a margin that's a very dramatic margin. So, I think that offers it. And then the asset in Java, it's a 1 million acre asset with a huge natural gas potential. A Canadian public company, already drilled 4 major discoveries on that property. We're going to take that, parallel those discoveries, drill those wells again. And that is what, when I was at Texaco, those are called elephant field opportunities. They're just humongous potential assets. That will cost hundreds of millions of dollars, but that's down the road a few years. So we'd love to have that issue of having to raise $400 million to produce billions of dollars of cash flow. So that's a great, huge upside for the company. But short term, we're going to have hitting milestones. We're going to have announcements coming out every few weeks talking about, we just drilled a well, we just finished drilling well, we just doubled production. Drilled 2 more wells, double production. So that's why I think we're a bargain right now at the price in the stock market.
Frank, thanks for being on the show today.
Sure. Well, thank you very much. Thank you.